The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow Industrials up 424, Nasdaq's up 132, S&P's 46. Gold contract down $19.30 at $15.57 an ounce. You get silver down 30 cents, $17.64 an ounce. Light sweet crude up 55 cents, $50.65 a barrel. That's that $50 level. We're teetering at that level. Notes and bonds. You get the 10-year down 19 ticks, 130.31. The 30-year off a full point, and 12 ticks and 162.13. Now, notes and bonds, folks. Bottom line, they continued higher yesterday, had a higher high, had big volume. Well, we get big volume on the way down today, but we'll see whether we end up with 2.5 million contracts in the 10. King dollar up 109 ticks, trading 97.909. The euro is at 110. The yen is at 109 and a quarter, and the pound is at 130 to $1 US.
We might have to steal your King dollar and call it King Tesla.
We got to do King Tesla, and guess what? If you're into King Tesla, we're going to get the king of the option market over here, our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And every trading day right now, folks, okay? 11 to 12 Eastern Standard Time. Great program. You want to understand the options market. You want to understand strategies. You want to understand defined risk. Tommy and I, we was just sitting there. I can't even figure this thing out, man, because the bottom line is that we're looking at we're 176 to 950. Yeah. And if you were short Tesla, you can make 176. Well, guess what? I mean, who knows who's still short? But it's
you just
still
lost
saying,
$700 in a short trying to make 176 if the company went to zero.
And it's still saying that we got a 17.5% short position.
Yeah.
Sick. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, when we talk about risk in names, right?
Yes.
We talk about if you're long something, it can go to zero, right?
Right.
But if you're short something, we always say, because lawyers tell us we should, it could go to infinity.
Yep.
I think Tesla may actually, this is the definition of infinity.
I
in
did.
Tesla.
If you're short, I would probably think you think this is the infinity barrier.
Exactly, because I believe if you were short around the $200 level and thinking it was going lower, or 250 or 350, where a lot of people, where it's stalled several times, I imagine that $905 feels like infinity to them.
I said, how about, obviously we know the 420, but that was perceived not as a joke, very skeptical. Who would ever buy it at 420 when NUS came out? And we now touch 940 this morning, so my goodness.
Yeah, if 420 is crazy, what's 840?
Exactly.
Yeah, now this is going to be a classic, folks, and don't get in the middle of it. If you're long it, God bless you, okay? But don't just think that because it's up another $100 today, it can't go up 200 tomorrow.
I heard somebody say they're changing from a car company to getting value like a tech company. And what if they just get value like a tech company for the next 5 years even, Be careful for sure.
Well, one of our listeners...
And let me tell you something. I can tell you that in 2012, there was a drought while trading the grain.
Yes.
Okay? Drought in the Midwest, drought throughout the central part of the U.S. And let me tell you from that experience that things can go much further than you think they can ever go.
Yep.
You're like, oh, it'll never go there. Yes, it can.
Yes, it can. And many times it will.
You better be protected when it happens.
If you haven't been in this market for years, folks, okay, you got to wrap your head around this because it's one of those deals that is incomprehensible. I mean, if you... just even a common sense thinker.
Sure.
You know what I mean? But it is what it is. And, it looks like, this run, it's amazing.
We'll find out what happens. Yeah.
Oh, we will.
Yeah.
We will.
Now, getting back to the overall market as we look at it, I thought the market would be up today, frankly.
Yes.
I did not think it would be up this kind of a percentage. That's what, even for me, this is a little shocking that the market's up as much as it is. And, it'll back off at some point today and catch its breath. And it's backing off a little bit already this morning. But, this, as long, people look back at the history of these viruses. And the history of these viruses say that it's temporary, right?
Yes.
Now, it may get a little worse. It may get a little better. It already looks like things are starting to subside a little bit, or not get worse. And people, investors look at these things as temporary. History tells us that they are temporary. So now that this market is starting to see that maybe, just maybe, and I'm not guaranteeing anything here, that it's not getting worse, it's on a path that doesn't seem to be accelerating, that people are diving back into the market.
Yes. And folks, okay, so Kevin and his team, it's outstanding show every trading day. And the way this market's trading, and the reason I'm bringing this up right now, Kevin, in the option market, it seems that most of our movement lately has been overnight movement. So it's not like what's cool about options, right? You can be in them with that defined risk. I mean, you can't get in the market right now. Well, you can, I guess, okay? But it's like, really? You know what I mean? So that's really cool that you can get, that defined risk. You can take advantage of whether, you're a bull or a bear, whatever way that is. But we are getting big movements before the market opens,
Yeah, and this is a really good discussion topic for us to have here today, because someone that may be listening to the show goes, well, what do I do? How do I do that? You're right. We're getting our big moves off of the foreign markets, which are moving our futures overnight and leading us into our trading day. Well, what do I do about that? You open a futures account. That's what you do.
Right.
You start to study and understand and get proficient in trading futures. You can hedge an account with S&P 500 futures, and when the market goes down, when the market sold off a few days ago, people ask, well, what should we do now? What you should be doing now is buying in the hedges that you put on before. Yes. And you cover them. When the market's down 500 or 600 like it was last Friday, that's not when you buy, you get short or hedge your position. You take off the hedges that you had on. That's what you do. And, it's so cool, folks, when you're talking a true hedge, meaning that you have a portfolio and you're putting a hedge on, because the reality there, if you're wrong on the deal, all you're going to do is lose the premium on the hedge. Right. If you're right on the deal, guess what? You saved your money and you might have made some money at the same time. Well, you would have made money at the same time. And you can hedge with futures. You can hedge with options on futures. There's a dozen different ways to hedge an account using futures to take some of the upside risk out of your account. We teach you how to do that. Yeah, you gotta love it. So, what are we going to be talking about today? Except another big day, right? Each day, this time of the year, guys, we have a headline name. Yes. Today, Disney. Yeah, Disney. We're going to talk about Disney. We're going to talk about, subscriber numbers for Disney. That's really going to be, they're going to put out a lot of numbers. Parks and recreation, media, studios, direct to consumer, but it's all going to be about the subscriber numbers and the operating losses from Disney Plus. Yeah. That's what everyone's going to be focusing on. They want to see guidance on how this thing is growing and how much money it's costing them to grow it. Yeah, it's an amazing company. I mean, it's amazing when you look back that, they started basically in the movie business, they get in the entertainment business, and then all of a sudden they are like everywhere. Do you know what I mean? It's pretty amazing. Listen, folks, 45 minutes from now, great program. Kevin, you have a great one, a safe one. Of course, we look forward to the program in 45 minutes. Great talking to you guys. Thanks for having me on. Great talking to you. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Market, Sherman-Williams. That's where it goes, baby. Positive territory, man. Positive territory. All green. Coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now up 401, Nasdaq up 121, S&P's up 44. Let's go into the NDX first and see strength versus weakness. We know what number one is.
Did you say weakness? There's no weakness. No, I kid.
Seriously.
I kid. The weakness, Google of all of them. Think how much we're up, and you're Google in the red by 4%. Go ahead, yeah.
So you get Tesla up 14.7%, $108. We had a high of a 940 or at 886. You got Sprint up 5%, 4.9. Okay. NetEase is up 4.2 and JD.com is up 4. Now, taken away from it's Google. Google's down 4%, 58.75. Now, if you bring this up, let's bring this up in TD Ameritrade because what I did see last night, Google went to an all-time high last night.
I think it got to 15.20 for a price.
For like a split second.
Yeah. Because I remarked
right at 4 o'clock when it came out
that they had such even numbers, and the low on Google, we'll pull it up, was 1,400 on the dot. So it literally flashed from 1520 to 1400 in the span of this, a 15-minute bar. Let's see if it was even as quick as 5 minutes last night. Yep, that same bar, 5 minutes, so probably right after the market. 1520.
It did. No, it was right. I was doing the update at 4 o'clock.
Okay. And so they beat on earnings per a share, missed on the total revenue number. And even to get why not a good time, head on over to the front page of TFNN, the morning market report.
Yeah.
Just because Google, especially in there this morning, China market's rebounding, right, finishing in the positive. I'm sure that helped by their central bank and the government over there in general. Here are the numbers on Google, though. $15.35 per share versus $12.53. But they took in almost $1 billion less than the market thought.
Okay.
I mean, that's that's a lot. That's a big number in 90 days. $1 billion, to be exact, was that 0.86, $860 million. That's almost $10 million a day that you just missed in revenue, and somehow you turned a greater profit. But that was your action last night, and pretty much where we're at right now on Google. 1436 or so. That might be a delayed feed, but down like 4%. Yeah.
The
even lower, 1423 right now live. Yeah.
Inside the Dow, let's go take a look inside the Dow here. So the Dow, look at everything's green.
Nike. They had a run yesterday, right, and today extending that. It looks like.
Come on, where are you?
There we go.
There we go. So you get United Health putting 45 positive points, Apple 45, Microsoft 25, Cat 25. There's not one Dow stock.
The biggest laggard, Verizon, which is up 17 cents.
Yep.
Yeah.
1, Isn't that wild, man?
It is.
That's something else.
And it is a big deal to say that China finished in the positive today, right? Yesterday, down between 7 and 9%. The headline, 3,200 plus stocks at their limit low.
Right.
You have to say, where's the pain going to go today? And I imagine that was not a true price discovery of supply and demand over there to go from 3,200 stocks limit down to finishing up 1.5% almost across the board over in China and in Asia. Yeah, and there's your pop.
You know, we hit a low of the CSI 300, 36.39 2 days ago.
Yeah.
And then you go topside, and they, you know, the bottom line is that they get the whip out saying you get a buy.
They do, and they're buying too, and those curbs are in there, which is the only reason yesterday wasn't as bad as it could have been.
Right, and you need curbs. That's the bottom line.
When I was telling friends about it, I just said, and we have curbs for the indexes.
Right.
It looks like they have curbs per an equity. I don't know if we have them as well.
We have them per equity intraday. That's how it works. We've seen it happen. You know, I think it's 10%. If it goes up or down, up or down 10%.
I know the index.
But they only stop them for like 20 minutes.
Right. On the indexes, I believe they have like 7%, then 10%, then like 15 or 20, and then it stops for the day. It's like 10%.
Right, so we can pull this up right now because it has it inside here every day, most of the time. ESH0. Because the last time we were dealing with this was...
There we go.
Up limit. Here it is right here. So up limit today in the S&Ps is 3409. Down limit is 3020.
Okay.
So you can imagine we're up 45.
Huge, right,
yeah,
right.
They're big numbers.
So that would put we opened the day at about 32.45.
Yeah.
So you're talking about
another 120 points.
Exactly.
Higher than that. Yeah. So that'd be crazy, right? That'd be 165, 170 points.
Right.
You know, either way. Yeah. So big number, no doubt about it. No two ways about that.
And then I think even, so what's that? That's on the future.
That's correct.
But then is the cash index, is the stock market still open as that's going on?
It is.
Right. So I think I think the indexes even have a halt, right? No?
No, it
7%,
does.
10%?
That's correct.
And then like
we can
20
pull it
or
up in the break, because what does happen is that you go from one limit up or down, the market stops for a certain amount of time, you go to a second one, and then there's a time equation in it. If you're too close to 4 o'clock, you shut down.
Yeah.
Or if you do one more, that's it for the day. Yeah. You know what I mean? Because I remember this from the crash in 2007, 2008.
That's when I became aware of it. It's like it stopped for 15 minutes.
Right.
Next one, maybe it stops for an hour, and then you're done for the day if you hit like a 15 or 20.
Because those panics, I mean...
You should. For sure.
Right. It just throws the whole deal off. Like,
gives everybody a moment to take a deep breath.
Yeah. Things that different within a day.
Yeah.
Let's go take a look at some of the higher volume equities out here, and we'll see where they get volume. You know, we came down on volume when, of course, we went to lower price. Yesterday, you went up with volume contracting. Today, we know that the big dog out here is Tesla, no doubt. You get GE up 26 cents. Uber's up 90 cents.
Okay.
You get Apple up 6.79. We'll pull up Apple.
Big one there.
Apple,
Asia rebounding. Apple prone to the Asia, however they're doing.
What's going to be so intriguing here is to see that, you know, okay, bottom line is that fundamentally, I mean, it'd be tough to be, I'm having a tough time wrapping my head around even fundamentally. Fundamentally, we know that China is shut down, probably 77% of the practice is shut down. Well, that means you know that cash flow shut down. You know that, like I brought up the supply chain from Apple last night. Well, they're going to be shut down. So there's going to be effect in these companies.
I would think so, too.
Right.
You know, for the companies that are able to figure it out the best, they'll come out okay. I had mentioned to you one of the reasons why Tim Cook is the CEO is because he was able to manage the supply chain so well. Doesn't mean he'll be able to ace this test, but maybe if somebody has a good shot, he's based in being aware of how that works, because you're exactly right. And I can only imagine you're going to have to, you're not, I can only imagine the conversations going on saying, what if, right? Playing out scenarios, what if we can't ship anything from China for 3 months, et cetera. And just the travel, the impact over there has to... Who's going to China?
Who's checking on things?
Who's doing anything? Right.
And you can see, if you're watching Tiger TV, I get the supply chain up. If you're looking at it, the left-hand side is the supply chain, the right-hand side are their customers. And you can see, you know, 80% of that left-hand side is in China.
Yes.
You know, so that's where this is coming out of. And, you know, the bottom line is that you need product to sell. You know,
especially if you're going to sell 60 billion of it in 90 days.
that's right.
Yeah.
And because that's why the companies are so efficient too, because because of the supply chains. You know what I mean? You don't have extra merchandise hanging around. You know, all this, which makes a huge difference. No two ways about that. We got to take a look at. Let's go take a look at Disney, because Disney's going to be the number out here today, right?
Yes, yes. One number thrown around with somebody maybe looking for around 25 million subscriber ads for the quarter. This is the day that they launched. What day are we? November 7th, Disney Plus.
Yeah.
3 or 4 days later, they come out and say they already had 10 million people. You trade to a high right after that, about 153. We backed all the way down.
Did you get it yet?
Did I get Disney? No, I'm not in Disney myself yet.
Okay. Not me either. Not yet.
Okay.
I will be, though.
Yeah.
I will be. 877-927-6648. We have the Dow Industrials right now trading up 435. NASDAQ up 134. S&P's up 47. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 462, NASDAQ up 143, S&P's up 50. Let's go over to Wynn and take a look at how they're reacting to. They closed the casinos in Macau. They're up 287.
Yeah, as the pain has stemmed over in the Asian markets, looks like it's reverberating to those casinos.
For half a month, they're closing them. 2 weeks.
And I guess that was priced in when it got that initial thrust from
Evidently.
where were we in the recent high? Yeah, from 154,
Yeah.
et cetera, to 120. So you shave 20% off the stock, 153. Yeah, so.
And if you want to take a look, it's serious business for these guys, because when you see this revenue number, Tommy and I have gone through this a few times. It's just a monster, man.
Yeah.
You know, on a yearly basis, 5.1 billion versus Las Vegas at 1.7.
3 times as large over there,
Yeah.
almost exactly.
And LVS.
And that's where they have the growth, 27% over 3 years versus 1% in Vegas.
Right. And Las Vegas Sands, which is up $1.70, trading 68.26.
Even more.
Yeah, look at that. 8.8 billion. And then they evidently got another casino in Singapore, which is doing well. 3.1 billion.
So 11.9 outside of the U.S., call it 12 versus 2 in the U.S.
Amazing, right?
Yeah, 6 to 1 in terms of how that matters for them.
Big numbers, man.
It's good to be a gambling house in Asia.
Oh, yeah.
Watch out, man.
There's no doubt.
Those rich businessmen in Macau.
Yeah. Big number. Let's go over to the gold contract. So they're whacking gold in a big way. GCG, I believe. No, GC. One second. I got to change this, I think. GC. Yeah, it is G. Right? Yeah, GC Joe. Oh, J. Okay, so we're on the April contract.
Okay.
So you're down hard. You're 232,000 contracts. That's big contract volume, no doubt. Yeah, so this can go after the low. Low's 1542 on this baby. If we go to the GLD, watch this. I did this yesterday, and this is kind of real intriguing, actually, on a weekly basis. The GLD is a confirmed ABC structure on the way up on a weekly. And, you know, you took out the B point. That's the B point, 61 million. Took that out with 61.5 versus 61.3. Now, we put this on a daily, so this is going to be a cool little test here. Because what you're going into, you know, yesterday we went down slightly with 9.1 million. You're at 2.9 now. I'm coming into like 12. Now, that looks like it's going to do 12 because we're at 3 already. So we'll see how this shakes out. Now, the swing low, however, is 145.08 and hasn't made it yet. So
it's pretty interesting. I'm just going to jump around a bit, but I was going through the charts this morning, and I've been noticed. So everything, right? So this first line on these charts, excuse me, I got to back it up one more. I wanted the low. 6 o'clock last night. So futures closed between 5 and 6 on this chart, right? So you go from 4 till 4:30. This line representing 6 p.m. Eastern time, all right? And then this line here representing midnight, all right? And you can really see almost every index. Let me make sure that's, sorry, I'm fast forwarding too much. So here's your, here's your 6 o'clock. Sorry, I'm jumping around. There we go. There's your 6 o'clock. I was back 2 days. So 6 o'clock on the chart, just everything turns, and it doesn't even look back since they opened last night, right? And that includes gold trading inverse. So there's the Dow 30, right? I mean, almost no pullback from 6 o'clock still through 10:30 this morning. NASDAQ 100. I'm going to find this again. There's 6 o'clock. You see the run up. Now, it's interesting.
And that's even with Google down.
So,
which is pretty impressive.
Crude oil, though, even, right? I mean, look at that. There's 6 o'clock last night. You trade from the low right at 6, 49.66 to 51.50. So crude, heavily dependent right now what the market is doing in terms of how the economy is going to be. And gold as well. That's Friday. We'll find it. There's 6 o'clock. Actually, the high last night. You see the spike, and then just lower territory for the entire time. And that even translated, actually, if you back things up to futures, currency. There's 6, where are we at? There's Monday, Tuesday.
What day is it? Oh, it's only Tuesday now.
When I had these earlier, there's 6 o'clock. So you see even the euro pulling back, dollar strength, right? The high. Just interesting as they all correlate.
Oh, it is.
They're not usually as perfectly correlated. But when everything is just China, the economy, the indices, you're seeing gold trade a little bit inverse there, and you're seeing oil trade with the market.
And the whole trade, as we were talking with Kevin Hinks, this whole trade, well, the whole trade hasn't been. I mean, the S&Ps are up 10 from the open here, but 40 of the 51 points right now are overnight.
Yes.
Yeah.
Oh, for sure. And we're right back up to 32.97, which was actually the high from Thursday evening before the run began, and we reached, I think, 32.11.
Look at this. Look at this.
You're talking about 32.97.50 to the penny.
This is sick.
That's what I was waiting for, because we were at 32.92. And for the purposes of the update, we're saying we basically got it all back because we were down to a low of 32.12. Yeah. And we're right back to 32.97. I mean, you're literally talking 85 S&P points down and up from Friday.
Right. So now, folks, when you look at this, right, a benchmark out there, of course, the benchmark is what we're just talking about there. But if you ever closed like under 32.80 today, well, what happened is this, is that you're coming into the downdraft. We get the test of the downdraft. We'll see whether it wants to go to all-time high. That would be the bullish case, of course, right? The bearish case would be that, like, if you don't hold this high here, it wouldn't really be a big deal. But if you didn't hold this high, and then you came down under the first day of the downdraft, meaning that when we came off that high at
January
32.80,
24th, that is?
that would be saying that, okay, now you get a consolidation happening, and this is going to consolidate around here for a bit. And that would also say that the game is on for the bottom consolidation. So,
or we'll just shake it off and finish at all-time highs by noon tomorrow.
No doubt. and of course, what does happen is that we're still in earnings season in a big way, and the momentum is on the upside.
It's almost really amazing. It's not almost amazing. It is amazing that in the continued face of the strength, right? The joke is shake it off. If you had said Friday at 3:30, we're going to be back above 32.97 when we're sitting at 32.12 by 11 a.m. Tuesday morning.
Right.
At 3:30 p.m. on Friday, you would think somebody would have came out with the cure vaccine to coronavirus like over the weekend for that type of a pop.
Right.
And we just, the markets basically stemmed some losses today, but they were down 7% yesterday. Yeah. In terms of the Asian markets.
Yes, no, there's no doubt, man. Yeah. And if we go over to the DAX and we take a look at the DAX, okay, so just to give you a feeling of what we have happening here, the DAX is up 205 points. Now this came down really hard, okay, so we're not up as high, but we're certainly digging right into where we did. Well, there it is. It's the same day. That's 1362, 13,262.
Yes.
And we hit 13,271.
Yep.
Now, this is where this is going to get interesting, folks. So the DAX is ahead of us by 3 hours, I think. So they'll close at 11:30. Where this DAX closes is going to be important, because traders, investors are going to look at where, does it hold this price? Because you're up good. I mean, there's no reason that it can't, but they'll be looking at that. And UKX. We'll take a look at the FTSE. Now that's weaker, but that's a big pop. Yeah, that's up 100 points, 7,400 number. Now that certainly hasn't got to where the downdraft started. Well, never started, even last Thursday.
We'll jump to break. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up 474, Nasdaq is up 158, S&Ps are up 53. So let's just look at this percentage-wise where we're at here. You get the Nasdaq up 1.7, S&Ps up 1.45, and the Dow up 1.67. So
big numbers, man. And you're going over to Europe, right? We cover them as well, 1.5% across the board, and there's what kind of started the run to positive territory with the CSI up like 2.6%, Hang Seng 1.2. Pretty dicey if you're over in Hong Kong over there, right? I'm sure you can imagine many of the people wanting that area shut down from mainland China, and they still have 3 ports open to come right from mainland China.
Big number. Folks, as you come over to our website at TFNN, you're going to see, of course, your morning market report that Tommy does every day. Great report. Get up in the morning, just hit that button. It gives you an overall of what's happening overnight, and you better understand what's happening overnight these days. And then right next to that, our man, Mr. Basil Chapman. You talk about riding the wave, man. He's going to be doing a workshop for his clients Thursday, February.
Yeah,
February 13th.
It is February.
It is February.
Time is flying. A week from Thursday, so 9 days from right now. Today is the 4th, and the 13th of February, a week from this Thursday, he is going to be doing a workshop, 90 minutes, 4 till 5:30, right after your program, Dark Cloud Cover, an essential market analysis. Basil is going to be talking about the specific techniques that helped gain, again, to identify the latest market downturn. Be interesting to see what Basil has to say about the pop we've got since then, of course. Where are we on those Chapman waves? And the topics that he's going to be covering. So a week from Thursday, Basil will be in there for all of his subscribers, and great reports every day that he puts out for his subscribers, whether it's Saturdays, Fridays, the weekend, of course, and every market day. So I encourage people to check it out. That'll be a week from Thursday, Basil with the Dark Cloud Cover. And Nico and Paige, they did their show this morning.
Yeah.
They got a special running for February. Speaking of time flying, get ready for the summer. Get healthy. You can save $25 when you subscribe and save. You can cancel at any time, so you just get the bottle. See what you think about it. Just use the promo code 25OFF. So you're going to subscribe and save $89. You hit that, enter the promo code 25OFF, and you can save 25 off, so $64 will be that first bottle. Great deal. That includes free shipping, and we'll send that out to you as well.
And health is everything, folks.
Yeah.
That's the bottom line. And, of course, Basil's going to have a show, and then I interview him this afternoon. So if you can't make this morning when Basil's there, check out this afternoon, because I'm sure that we'll be riding this thing.
We all have something to say, man. It's almost, 3% down, 3% up. We're sitting at 32.98 in the S&Ps. We were just at 32.12.
Yeah.
And the VIX, still pretty muted when you think about where we've come from, where we've been. Now we're getting huge moves, but we're sitting at 16. And again, the market's almost at all-time highs, right?
Right.
Now,
So
we were there last week in terms of even before the huge escalation on Friday, because you see it. We came into Friday, even if you end a Thursday, at 1550. And then that's when, the Dow was down 500-600 points. But we were just at 20. We're sitting at 16.
And you can expect, when volatility comes in the market, folks, okay, it just doesn't go away. So you can expect this for a bit. Now, what does a bit mean? Yeah, 3, 4, 5 weeks. We'll see where it shakes out. But I suspect that we're not done with this volatility.
Let's see what they're going to charge us for Tesla, all right? I'm curious. Let's dig into the option market.
Okay.
We have hit 940 at one point today.
Nice. So it's at 905.
And I think this is going to be a delayed just quote because especially
I'll put the real one up there.
Go for it. Go ahead.
So.
And even if we'll do.
Okay. Yeah.
So we're at about 890 right now, about $110 for the live quote. Taking the February 21st, so we're giving ourselves till the true monthly option expirations are expiring. Looking at even a call, we're trading at, we said, about 890 right now. But even the 900s, we're looking at $75 on the buy side and 100. So even if you're trying to take at the money, what are you looking at? 80, 160, 180, $180.
Wow.
And you could call that the expected move. And this is where to get in. Let's put up. I love these charts in Thinkorswim, and hopefully I'm going to be able to find it. Risk profile or probability? Probability. Here we go. So this is where you're really talking about the expected move as you go out days, right?
Right.
So we just looked at, call it
the 22nd.
Yeah, and we're the 24th. So you're talking about 18 days. So you go out 20. You can see that the move to the downside is 690. We're trading at like 880. That's what I just said, right? If you're looking for a move one way or the other, you can see how this is expanding. And they just, mammoth numbers. This is where if you're going to buy a 75-day put, right?
Yeah.
The market's looking for $500. It's pricing it in. You're at 883.
Both ways.
You're at 883.
Yeah.
You have to, be prepared for that type of volatility. Just mammoth numbers, of course.
That's pretty intense, man.
Yeah.
Let's look at Disney, what the expected move is tonight.
Yes. So Disney. You can get back to that fundamentals, I believe. Perfect. Oops, we're still on Tesla.
Look at that.
I know. It looks like they have earnings with a one-day expected move of $60.
I know.
Disney. So 143.84 right now and about $8.15.
Okay. That's a decent move.
It is.
That's a decent move.
The first earnings numbers after they start Disney Plus, the first time they're going to have a conference call. How many people signed up? What's the stickiness been? I'm sure.
Right.
What's the competition like? How much are you going to spend maybe in the future? Are you going to make everything available? It'd be pretty cool to be an analyst on that call because there's a lot that you might want to ask whoever they put on that
and
call.
then I guess the Shanghai is closed. Disney World in Shanghai. And then the real question's going to be like, okay, well, we know this will be over, but the real question is that, is it over in a month, or is it over in 6 months, or a year?
It's a great point because I hadn't even thought about how much money movies do in China, right?
Yeah.
What happens when you have an opening box office? We've always heard the staggering numbers in the U.S., and then they tell you what the worldwide total is, mostly having to do with China. If
You're not going to be going to a movie theater.
No, right? I imagine that's definitely going to be... Yeah, no, exactly.
Right. Not even
Any
close.
closed space over in China, I imagine people are trying to steer clear for the time being.
Pretty intense, man.
Yeah.
Yes. And we'll see. We'll all get a lesson on basically cash flows and what goes in and out of companies when you have something that's this big. Because, when SARS was here, I don't remember all these factories closing down.
No. And I imagine that's why we're seeing the reaction in China because we're already over 20,000 cases. I think SARS is at 14,000 to 17,000 total for the entirety of.
And that was like a year and a half.
So I think that's why you saw the reaction from China, whether they're telling us the truth or not. They saw that it was going to far exceed the numbers, at least for the reach, and the death tolls. I think above 410.
Yeah, big numbers.
It is.
Stay away from bats, folks. That's the bottom line. I was looking at this. They had these guys yesterday. There's been research going on for a long period of time into these bat caves, and they're showing these guys like in these suits that are big guys and women. Okay?
Yes.
And they've been doing research on these bats for a long time, and this evidently is off the bats too, as was SARS.
Yeah.
And it's a far distant cousin from it. That's what they're saying.
Yeah, it's a coronavirus. It's a different strain that's never been seen. So.
Not good.
Not good.
877-927-6648. You get the Dow up 437, Nasdaq up 146. S&Ps are hanging up there, up a good $50. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 447, Nasdaq up 151, S&P's up 51. And, you know, it was wild is that we're dealing with large numbers anyway, right? So it's like, because the indices are so high in price, that down and up 400 in the Dow is really pretty intriguing, actually.
I mean, it's wild that I'm just jumping over to the S&Ps because getting 90 points, man. So every point's going to be $50.
Yep.
Right. 100 would be 5,000 then.
That's correct. Yeah.
So and the speculator, you're looking at 7,200. So you just went down and up almost $5,000 per contract. You only need in your account 7,200. Let alone the secondary one, you're looking at 6,600. If you're, it's just right up in that limit. And the fact that you did it both ways since early Friday morning, we'll call it late Thursday night.
Right.
Yeah.
Right. And then if we go into the NQs, watch this.
Oh yeah, this might even be a better one, right?
Well, it's 8,200 to put it up, 8,250, and they got
so $20 a point.
Yeah.
So 100 points would be 2,000, and
today we went.
Yeah, we're almost at 4,000 today alone. Can you jump to the chart of them just to see the up to the down? So what are we about? We're approaching 9,300, and the low was about 89.73, so call it 300 points. That's about 6,000. So right up in the limit too. 75% of what you're putting up for a speculator contract. And again, it's not just one way. Whatever way you were.
Yes. No.
So if you're, if you get in at the lows and you're bearish, you're saying I think the run's going to continue. The coronavirus is going to reverberate. Next week's going to be a tough week. You're almost out of your entire account right now. Watch out.
Stay right there, folks. We got Thinkorswim coming up next. We talk about defined risk. You got it, then I'm Mr. Basil Chapman. Ride that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Well, look at him, folks.